$623 billion with a compound annual growth rate of 25%. So the real question that we're asking ourselves is how will financial institutions and fintech investors harness the opportunities that they have? What will be the repercussions for traditional financial services? What are the major challenges? Hey, Zach, what are the major challenges that these businesses will have to overcome? So we have a great panel, and I'm going to sit down. We have a great panel to talk about this with us. On my immediate left, Hakan from Akbank. Next to him, Zach Perret.
Correct.
Excellent, from Plaid. Then we have Julia Leung.
Plaid.
Wonderful, from the Hong Kong Securities and Futures Commission. Mazen Pharaon, Chief Digital Officer at Riyad Bank. And last but definitely not least, Dan Schulman from Valor Capital Group. So I'm going to get stuck in. Hakan, and I want to come to you first. As the CEO of a traditional bank, Akbank, what is the specific value that you think traditional banks bring to the table? What have you found as you're beginning to engage in digital finance?
To embedded finance.
Embedded finance, yes.
You are right, actually. We are a bank.
Yeah.
We have a banking license. But things do change so rapidly, and technology has so much impact on financial institutions. We are actually also a technology company, so we have been investing so much in technology and so on. So we all have to change because, you know, when you look at our consumers, our customers, they have different expectations. They want to bank in a different manner. You know, nowadays they don't want to go to branches. 98% of the transactions take place in a mobile environment and so on. So we have to adapt ourselves to this new model of banking. So there are a couple of maybe theoretical words, maybe I should mention: banking as a service, banking as a platform, bank agnostic models. So these are the things that we deeply believe in and try to, you know, convert ourselves. So we have been investing so much in technology and so on. We are actually very integrated.
But what's the challenge you face? Because I know, I mean, you know, anybody who's worked in large organizations know changing organizations is an awful lot harder than creating a new organization. So can you just say a word or two about changing organizations? As a traditional bank, what are the challenges you've faced in trying to move to this new banking as a service, these new technological...
Actually, it also depends on the cultural part as well. So where you do your banking. So actually, as a banker, I was a bit, you know, lucky because when you look where we live, it's a very young country. So when you look at the average age, it's like, you know, 34. It's the youngest in Europe. So that was a clear advantage for us. So that in terms of infrastructure, telco, and so on, I think the environment was also something very suitable for us. So when you look at the bank, the bank people, like, you know, 95% university graduates, like 20% almost with masters and PhD degrees, it was relatively easy for us, especially, you know, onboarding new people, new bankers. I mean, they were embarrassing this change, you know, rapidly, more easily than traditional bankers.
I imagine if I had asked you that question 10 years ago or 5 years ago in a private setting rather than a public setting, you might have said, this is really painful. So, but I'm going to let you sit with that one, which is the positive spin. And I want to come to you, Mazen, because you're leading the digitization of a traditional bank. Let me ask you the same question. How are you realizing the opportunities? What are you seeing as the challenges, and how are you actually getting it done within a traditional bank?
Well, thank you for the question. There are obviously challenges, but there are much more opportunities to look at. So maybe I have a bit more liberty in the juncture between traditional banking and digital modalities, but I think the market at large and the industry, and definitely in Saudi Arabia, there is quite an appreciation to the disruptive digital models, the disruption that happened in different industries, and as it evolves quite rapidly in Saudi and the region with rapid digitization across all industries, there is quite an appreciation from the banking community and our bank definitely on these modalities. And we look at it in two different ways. There is a defensive play and there's an offensive play in the digital disruption arena. I think looking at every industry that have come to the junction point or the center of the gravity of disruption, there is a level of democratization of technology. There are emerging business models that are coming, leveraging business, new technologies and emerging technologies, and it's becoming a fact that these fintechs and non-banking institutes that are integrating financial services or offering alternatives ways of leveraging financial services to the end consumer, they're becoming reality, and hence there is a defensive interest in the legacy banking sector to remain relevant and tap into its power and its capability, which is the balance sheets, the network, the capability, the resources, the license, and the trust of the consumer.
Okay.
But there is beyond that a much more optimistic and drive into this whole revolution, and that is the opportunity of growth in this whole market, the emerging fintech space, but NBFIs and industries that have no direct relevance to financial services that are one way or the other, innovating around their journeys and their products and their services and need to complement their offerings to their clients with end-to-end service. And that's where financial services and embedded finance becomes extremely powerful.
So I'm just going to push you again a little bit more. Get specific for us. So what are the embedded finance technologies or finance solutions that you're seeing really move the needle? Can you give us one or two examples that you think are the most interesting as you look ahead?
Absolutely, Zachary. There are just countless opportunities, and my mind continues to get blown away every time I talk to innovators around the business cases. From bank inside out, we have certain idea, but as you look at emerging cases from the innovation that's coming out from grassroots, it's just mind-blowing. Well, to give you two specific examples, I think a lot of aggregators, whether they are in the FMCG space or the delivery space or the e-commerce space, are now looking to embed wallets as a service, as offerings to their clients. And in one way or the other, they're operating as banks to their clients, whether clients being consumers or merchants or corporates. And that's an offering that we push out through embedded finance into their platforms and their capabilities, and moving the relationship between us and the eventual client from a first-degree relationship to a second-degree or multi-degree relationship. So that, as a use case, turns every client of theirs into a client of ours. So the massive opportunity there for the traditional banking sector, if you wish, is quite massive. Another example along the same lines is microfinance. Buy now, pay later have took the world by storm. There are different views on it. It is quite successful in this country. And it is, between buy now, pay later and other microfinance modalities, there are a lot to offer through these third-party platforms to their end customers.
Zach, I want to bring you in now. You're the co-founder and CEO of Plaid. That's my British, my American. I don't know what to use.
Plaid. Our UK team calls it Plaid, and I call it Plaid.
Okay, Plaid. We'll go with Plaid.
Right.
Which is a leading tech platform. What does it take for banks to win in the competition with tech companies, fintechs, and the like?
Let's see. So first I would say that it's not really competition between banks and fintech companies. It's not necessarily competition between banks and tech companies. I think what we've largely seen is that the banks themselves are leaning heavily into fintech. They're trying to build better digital solutions for their consumers. They're having mixed success right now, but they are themselves trying to become more digitally enabled. I always say that the biggest banks are the biggest fintech companies. And so people always try to draw this tension between what fintech is doing and what banks are doing. Ultimately, what's happening is that there's kind of innovation happening across the ecosystem at different paces. Small companies, non-banks that are unregulated, they can move faster. They also fail more. And so there's a lot of experimentation that's happening, and then the banks themselves are starting to absorb kind of the best of what is happening. They're doing it at scale. They're doing it in really large ways. In the US, you can see the top, call it 4 or 5 banks investing billions of dollars a year into digital solutions. And it's going really well for them. You're actually seeing the banks that invest the most into creating differentiated data solutions, differentiated ways of either serving their customers, acquiring their customers, lending to, or underwriting their customers. They're having massively more success in terms of selling products to those customers. The average bank in the US has no engineers. They outsource all of their core infrastructure to a set of these core providers, and they are falling behind. And so there's a pretty big digital revolution and a pretty big data revolution that's still ongoing. I would say that there's still huge opportunity for the foundational banks to emerge. And this concept of, the panel is ostensibly on embedded finance. It's still fairly narrow in its application. The only two things, actually what you hit on, the only two things that we're seeing have real value at scale are embedded lending and embedded store of value or embedded payments. So which I kind of bucket as more or less the same thing. We haven't seen more innovation go on in embedded finance, but there will be more over time, I suspect.
Okay, so that's going to be my next question, picking up the same from what I asked Mazen. Okay, you're going to be seeing more. What's it going to look like? Give us a little sense of it.
In the future?
Yeah.
I mean, it's questioning. I would question some of the utility actually. So when you look at a standard merchant, let's say any given retailer, an online retailer, they want to convert more users to buy more things, and they do that by kind of offering them easier ways to pay, or maybe offering them financing as they're trying to check out, and then they want their consumers to be more loyal, so they come back more, and they do that by offering rewards of some sort. It's not that they necessarily want to offer a zillion more things to those consumers. They don't want to offer banking services to the consumers. They don't want to offer checking accounts. That might exist elsewhere. I think where the biggest opportunity still lies is through the non-bank bank partnership to create kind of checking accounts in places that people might naturally want to see them, or kind of other types of financial products in places that the consumer might naturally want to see them, that for one reason or another, the big bank isn't actually able to deliver. Either they don't have the ability to reach those consumers, they're regulatorily inhibited from doing so, and then they can get there more through partnerships.
So I'm going to come back to you, in fact, to all of you, and ask the question about partnerships. Where do you see the opportunity of partnerships that aren't being realized right now? Because you kind of, the way you've described it, the three of you have described it thus far, is it's kind of one or the other. You've kind of created a binary set, and I'm just wondering where the partnerships are. But I want to move on to the regulatory environment, because we've talked about the industry side, and as a former government official, I know that it's really hard for innovation to take place. It's really hard for traditional companies to change when the regulatory environment isn't well understood. And there's opportunities in a world in which there's little regulation, but there's also challenges in that space. And I know that this is one of those spaces where we're kind of halfway down the road, but maybe not fully down the road. So, Julia, I want to come to you. Can you tell us a little bit about how you think about the regulatory space in your part of the world, but then also how that might differ from other parts of the world? So if you were sitting here, again, privately, yes, we're in a public domain, but if you were sitting here in a private space with some of your regulatory colleagues from the United States, from Europe, what would you be saying? What's the kind of conversation you'd be having? But tell me what's going on in your part of the world first. What's important?
Thanks for having me. On the regulatory space, I think innovation is a big challenge to regulators themselves, because we see the benefits, the potential benefits of technological innovation, say the use of blockchain as a base to deliver financial services, but we also see the risk that goes with it. So, what we in Hong Kong or in that space, I know you like to go specific, so I'll cite a specific example. We see the benefits of using blockchain as a base to settle traditional payments, cross-border payments for trade, for example. And that is the use of CDBC, that is the central bank digital currency, and also potentially also the use of stablecoin in order to settle trade between two parties in the world, like between Hong Kong and Saudi Arabia. Now, how do that bring about? Because it needs the entire ecosystem for this to happen. And so, first of all, I know that being there are banks here and there are fintech firms here, you have to provide guidance, because if you do not provide guidance to the to banks or to the financial institutions, they would not venture in this space. So in Hong Kong, there are several sandboxes or projects. One, for example, was just recently launched. It was a sandbox for a stablecoin, and that stablecoin was newly minted by a e-commerce platform, which already have a lot of merchants along the supply chain. And so by putting it into a platform, into a sandbox, they can pilot with the use of the stablecoin to settle payment between Hong Kong and Vietnam, for example, a factory in Vietnam, for example. Now, the stablecoins needs to be regulated. It needs to make sure that the reserves backing it is what it says it is, and we require it to be one-to-one fiat currency, that is either Hong Kong dollar to one stablecoin, for example. And it is potentially, we see benefits of this benefiting like small value transactions, because we're all familiar with the cost of remittances, particularly when you're remitting to a country which is less developed banking system.
So I have a question for you, but it's a question I also, and I'm going to come to you in a second, Dan, but it's a question for all of you. If you can tell me really briefly, what's the one regulatory change that you would like to see in your part of the world that would allow you to transform the industry as you see it? Is there something that as you think about it and you go, if I could click my fingers and have the government do X, that would make my world much better? And my question, kind of similar question for you, Julia, is what is the thing that you are having people in the embedded finance space knock on the door and say, please, we need this, we need this, we need this? Okay, Julia first, and then I'll come to you.
I haven't.
Very quick answers.
Answer your question is you have to work with the industry, understand they come out with a product innovation, and we look at the risk to see if it can be mitigated, provide the guidance.
But I want to get specific here with the audience, because at the moment we're in generalities, right? And these are interesting generalities, but they're nevertheless generalities. So what are the specific changes that you need, whether it's in the United States or it's in Turkey, US, that would change your ability to get stuff done?
If there is one thing, I mean, there are many things, but I think
Always.
the most crucial thing is this cloud usage, because countries are becoming more and more concerned about data security.
Yeah.
But on the other side, there is so much advancement on the cloud side. So if there are lots of restrictions around that, so that the amount of collaboration that you can do on a global basis gets
limited.
reduced, gets limited. So I think this is one of my biggest concerns where we live. So it really depends on the geography that.
Do you actually have a banking regulatory restriction against using cloud services?
Yes, we cannot actually export our data and use the cloud services outside our country. So these are really limiting ourselves. I mean, so far we did very well in terms of technology and so on, but we have to cope with all those changes. So it's somewhat.
And I want to come back to this idea of data, but I want to come to you first, Dan, because I want.
But Europe also has I guess, certain restrictions as well. Not as much as we do, but there are limitations.
Not as much as we do with GDPR, but it's a whole different.
Yeah.
But Dan, let me come to you, because I want you to take a longer time horizon. This is the future investment initiative. So let's look out. We've been talking a lot about the present and the regulatory environment we need for the present and how we're seeing change now. Take us 10 years from now. So if you were to look out 10 years, what is it that you see? What does this world look like? Describe it to me.
Well, I don't think anybody can really look out that far and be accurate, but I'll tell you what I hope it will be.
Okay.
Because you have massive changes that are going to be going on from a technology perspective, whether that be the underlying rails of the system that I think will increasingly move to blockchain oriented, just because you can do transactions almost instantaneously. You can probably reduce the cost of a transaction, maybe have a transaction 1/100th the cost of a traditional transaction. You can settle instantaneously versus hours or days. So we'll look at the underlying infrastructure that will change. The regulatory structure will no doubt change as a result of that. It will never, the regulatory infrastructure is something that is massively important for financial services. The stability and integrity of the system must be kept. There is no way that any country is going to give up their monetary authority or policy making to a decentralized type of currency. I don't think that will happen. You probably agree with that. I'm sure regulators here and regulators I've talked to around the world would agree to that. Any fintech who thinks that they're a disruptor, who thinks that they're going to be disruptive by going around the regulatory structures is crazy. That will not happen. The regulators will stop that, and for a good reason. I think also one other thing I just want to emphasize, every bank is a fintech right now, and every fintech is looking to work within the structures of the regulatory environment. Okay, so where do I see this going 10 years from now? Look, the problem of the world right now is we have 2 billion people that live outside the financial system right now, that aren't served effectively by the financial system. And I would argue we've got another 2 billion that are ineffectively served by the financial institutions of the world. They either pay too high interest rates, or they have fees that make it prohibitively expensive for them to be financially healthy. I think the moonshot for our industry, and this is all financial services company, that I think is routed or rooted in technology, is how do we bring those 4 billion people into the system? How do we create a system that is more inclusive, that is faster, that is less expensive, that enables us to follow KYC rules, all AML rules, but do it in a way that leverages the innovation that's happening in technology. I think when it comes to regulators, I've spoken to hundreds around the world and very deeply in the US, what all of us want, banking, FIs, emerging, is regulatory clarity. What does it look like? How do you want to regulate us? Who's going to regulate? And do we have the ability to have some harmonization globally as well? Because, look, there are 1.6 quadrillion dollars of transactions that go across the world. 1.6 quadrillion. We're talking, like you were talking, billions. That's like nothing. We need to think about how do we take those flows and enable more people to be a part of it and do it in a way that is way more efficient than what we have today.
So I love that. You've just given the problem set, and I want to come to each of you. So whoever goes last gets more time to think about it.
Do you hear that, Zach? She loved it.
There we go. Well done.
what is the low-hanging fruit to bring those 4 billion into the system? You're talking about growing the pie. So each of you, what is the low-hanging fruit from where you sit to bring some subset of the 4 billion?
Allow me to go in here, and I think, and while I'll do that, allow me to push back a little bit as well on the complexity and the challenge of the regulatory in the theme that we're talking about, which is embedded finance. Obviously, the regulatory challenge, safeguarding the system and what have you, is an absolute challenge when we talk about any digital disruption. But I beg to differ specifically on embedded finance. It's not as complex as a problem, because the core product that we're embedding everywhere else is already regulated. There is an innovation to happen on the products and how the products get disseminated through this operating model, but the core principles that are needed to safeguard the system as we start and emerge in this industry are already there.
Okay.
There would be some challenge though, as center of gravity. Go ahead.
No,
I just want to
finish that thought, but I don't think you're going to get out of the answer to the question of the 4 billion.
Yeah, I'll get to that in a second. The easy way today, I think in an emerging industry, an emerging sector, is today these products lie in the bank. There are technical ways to embed them into other journeys while still tapping into the controls that the regulators have instituted inside the bank. Simple way, technology-wise, SDKs implementation, but that's not going to scale up. As more regulatory evolve beyond the financial sector in terms of liability management across these entities, the fintechs, the NBFIs, the commercial sector, that's who's going to disseminate the end product to the customer, then it will flourish. To the question of the 2 billion, I think this topic is one of the frontiers that's not, there's no one way to solve this problem, but this is one of the toolkit the industry has, is basically getting the banking sector to enable the innovation sector, the fintechs, the startups, to reach that 2 billion.
Okay, so what's the one idea? I want an idea, because what you've just given me is true, but it's generic. I can't now go away and do it. So what's the one idea from each of you, including you? You're leaning back, Dan, as though I'm not going to come to you.
I'm ready.
But you're ready, okay.
Yeah.
Go ahead. What's the one idea, the 4 billion? How do we get the 4 billion?
So I think we need to be sure that people don't need a credit card or a debit card to be able to transact. They're able to take their cash and convert it into digital fiat.
Okay.
And that digital fiat, once we digitize the system, then you can move things without intermediaries. You can move things at much lower cost. For instance, if everybody has a digital fiat and we have interconnectivity on an international flow, my moving money from the kingdom to India or to Pakistan, instead of costing 6% to go do that, can cost a fraction of that, because instead of like moving money, then it's got to move over, then it's got to be converted into cash.
Okay.
It moves from one part of a server to another part of a server. And so it is instantaneous and low cost. But if you want to bring people in, it's get rid of that requirement to be part of the system. You need a credit card or a debit card, because not everybody can qualify for that.
I'm with Dan, because I started talking about using stablecoin or central bank digital currencies, digital fiat, to settle payments, cross-border payments. But it's not a low-hanging fruit. It needs to build the infrastructure, to build the underlying, you need interoperability, you need the blockchains to plug in. And then we do have a mBridge, a project which involves Saudi Arabia and Hong Kong and a dozen other countries to test on a wholesale level, moving the digital fiat from one country to another.
So digital fiat, that's the not low-hanging fruit, but that's the answer. That is an answer, an early answer. Is that, okay, no, Zach, you've got more time to think. Go on, Hasan.
I think digital onboarding is the key.
Okay.
So making, this onboarding process as seamless as possible. I think this is the most important thing. So you can have different products. You can have, lending products, deposit products, wealth products, insurance products. You can put, something else on it. But onboarding, making this onboarding as easy as possible, I think this is the critical thing, because we have to also obey certain rules, AML, compliance, etc., etc. So it should be so seamless. Despite we obey all these regulations, the customer should not really feel this. I think this is the heart of the matter. Then you can put some other products. That's what our experience does.
We're bringing this system together. You're going to onboard people. You're going to, between the two of you, figure out the infrastructure and the digital currency.
More banking charters.
More banking charges?
Charters.
Charges,
It's incredibly difficult to become a bank in most geographies. In the U.S., there's a lot of companies that should be banks, but the U.S. issues no banking charters. Most countries treat it as almost a sacred thing to actually get a banking charter. It'd be very easy to shift the paradigm and say, instead of you can't have a banking charter, you're actually required to have a banking charter, and we're going to regulate you. We'll put guardrails around it and make sure that you act responsibly. But right now, the difficulty to launch a bank in most geos is incredibly high. If there were way more banks, the free market would solve all the problems.
I love it. Free market. What's your...
I think it's really relevant. I don't think there's a one answer to this.
Clearly not.
The last, it's basically depending on that unbanked sector, where is it, in which country or which jurisdiction, what is the best way to get to those. So there are, in Africa, there were good use cases while using telcos and mobile operators to offer banking services. In rural India, there were good use cases of using last mile merchants and mini markets to reach the farming community. So I think it really starts, where's that customer base? What's a good touch point with that? Using that touch point or creating an alternative to that touch point and embedding the story through it.
So for me, this has been, so thank you all, been an incredible conversation. I've taken away the two banks here, traditional banks here, are stepping up to the plate in, it's about reach. It's about bringing people into the system for both of you. Let's get more banks out there. Let's change the banking charter. And then we have the last two people on the panel talking about how do we essentially make it all digital so we can remove the friction. So we now have our tasks set up for us. I'm going to give us more than a year to get it done. And my guess is we're going to have to work together to do it. But thank you all very much for joining in the conversation. Thank you all very much for sitting here. And please join me in thanking our panel.